Welcome back, everyone, to the deep dive. Taxes. I know. Not exactly the most exhilarating topic, but stick with us.
It's really not as scary as it sounds. And for anyone out there building a business or, trying to grow their wealth, well, understanding taxes can actually be kind of empowering.
Right, like knowledge is power and all
Yeah.
that. We actually went through a bunch of your research for this deep dive, and one that stood out was the Margin World podcast.
Oh, yeah, they had some really interesting takes.
Yeah, like they had this whole thing about how taxes are basically just the price we pay to, live in a functioning society.
It's like, yeah, we all want good roads and schools and healthcare, right? But those things don't just magically fund themselves. Taxes are how we as a society kind of chip in to make those things happen.
Exactly. It's like the membership fee for a decent civilization.
Exactly.
But okay, let's bring it back to what's probably on everyone's mind. How do taxes actually affect your own money?
Right, right. Well, Margin World spent a lot of time on income taxes and capital gains taxes, which makes sense. Those are the big ones for most people.
Totally. And they had this really interesting point about how the legal structure of your business can make a huge difference in how much you end up owing in taxes.
Huge is right. Like, they really hammered home the difference between, like, being taxed as an individual versus being taxed as a corporation.
So like if you're a sole proprietor or in a partnership, your business income is basically just treated as your personal income on your tax return.
Exactly.
But if you incorporate, say, as an LLC, you might end up paying corporate tax rates instead, which, depending on your situation, could be way lower.
Yeah. And you might even qualify for a whole bunch of other deductions that wouldn't be available to you otherwise. Margin World made it clear that choosing the right structure from the get-go can potentially save you, like, thousands of dollars each year.
Okay,
Thousands.
that's huge.
Yeah.
But I'm guessing it's not exactly one-size-fits-all advice, right?
Oh, for sure not. Like, the best structure for, say, a freelancer is going to be totally different from what's best for a small business owner. It all depends on your specific business model, how much you're making, your goals. Margin World actually really emphasized how important it is to talk to a tax professional. They can help you figure out the best approach for your unique situation.
Okay, so expert advice is key. Got it. Now, let's talk about something that I think a lot of entrepreneurs might not be aware of. Business deductions.
Ah, yes. Music to every entrepreneur's ears. And Margin World really dug into how these can be an absolute game changer.
Yeah, like I've always been a little fuzzy on the specifics. What can you actually deduct?
Well, basically, it comes down to anything that's considered a legitimate business expense. So we're talking office space, supplies, travel, all that good stuff.
Yeah.
And the more you can deduct, the lower your taxable income.
So it's like finding hidden treasure, but in your finances.
Right. But Margin World really emphasized that you need to keep really good records of everything, like every receipt, every invoice, hold on to it. You need to be able to back up those deductions if you ever get audited.
It sounds like a bit of a headache, to be honest. Maybe this is another area where a tax professional could come in handy.
Oh, 100%. They live for this stuff. They can make sure you're dotting your I's and crossing your T's and maximizing those deductions without, accidentally running afoul of the law.
Okay, so we've talked a lot about how entrepreneurs can, like, strategize with their business structure and deductions. But what about us investors? What did Margin World have to say about taxes on our investments?
Well, they definitely dove into capital gains taxes, which, if you're investing, you definitely need to understand how those work.
Yeah, for sure. I know there are short-term and long-term capital gains taxes, but honestly, I always get a little confused about the difference.
Basically, it comes down to how long you hold on to an investment. Like, if you sell an investment after owning it for less than a year, those profits are considered short-term capital gains, and they're taxed at your regular income tax rate.
Okay, makes sense.
But here's the kicker. If you hold that same investment for more than a year, then bam, you're in long-term capital gains territory, and the tax rate is usually much lower.
Ah, so patience is rewarded when it comes to taxes. Got it.
Exactly. Margin World definitely emphasized the benefits of playing the long game with investments.
They also talked about something called tax loss harvesting, which honestly sounds kind of like financial wizardry to me.
Yeah, it's a bit of a pro move. But basically, it's a way to strategically sell off investments that have lost value in order to offset the gains you've made on your winning investments.
Right.
So you're basically like strategically realizing those losses to lower your overall tax bill.
That's so smart. I'm definitely going to need to do some more research on that. Okay, so we've covered entrepreneurs, we've covered investors. Now let's talk about something that applies to both. Tax-advantaged accounts. I feel like these are shrouded in mystery for a lot of people.
It can definitely seem overwhelming at first. Like, there are so many different types, each with their own little quirks and rules. But Margin World really emphasized that these accounts can be like secret weapons for building wealth.
I like the sound of that. So let's start with the basics. What exactly are we talking about here?
Well, the most common ones are IRAs and 401k. These are primarily geared towards saving for retirement. And the way they work is like with a traditional IRA or 401k, you contribute money before taxes are taken out.
Oh, so you mean like pre-tax deductions from your paycheck?
Exactly.
Yeah.
And then that money grows tax deferred, which means you don't pay taxes out it until you withdraw it in retirement. And hopefully you'll be in a lower tax bracket then, so you'll end up saving a bunch of money on taxes.
That makes sense. But I also hear people talking about Roth IRAs. How do those work?
So Roth IRAs are a little different. With the Roth, you actually contribute money after taxes have already been taken out, so
Wow.
you don't get that immediate tax deduction like you do with a traditional IRA. But here's the really cool part. When you start withdrawing that money in retirement, it's completely tax-free.
Wow, so it's like you're choosing when to pay the taxes now or later.
Pretty much. And the best choice really depends on your individual circumstances, like how much you're making now, how much you think you'll be making in retirement, your risk tolerance. It gets complicated.
Sounds like it.
Yeah.
Okay, but Margin World also mentioned a couple of other tax-advantaged accounts that I'm less familiar with, 529s and HSAs.
Right. So those are like more specialized accounts that are designed for specific goals. Like 529 plans are specifically for education expenses.
Yeah, so if you're an entrepreneur and you're dreaming of sending your kids to, like, Harvard Business School one day, a 529 might be a good move.
Exactly. Basically, with a 529, you make contributions with after-tax dollars, but then those earnings grow tax-free. And when you use the money for qualified education expenses like tuition or books or even sometimes room and board, those withdrawals are tax-free too.
That's amazing. Okay, what about HSAs? Those seem really confusing to me.
They're definitely a bit niche because you have to have a high deductible health insurance plan to qualify. But if you do, HSAs can be amazing. Like Margin World called it a triple tax advantage.
Triple. Okay, I'm intrigued. Tell me more.
So first of all, your contributions are tax deductible. So right off the bat, that lowers your tax bill for the year. Second, the money in the account grows tax-free, just like with an IRA or a 529. And then third, if you use the money for qualified medical expenses, those withdrawals are tax-free too.
Wow, so it's like the holy grail of tax-advantaged accounts.
It's pretty amazing. But like with all these things, it's important to do your research and make sure it's the right fit for your situation.
And maybe this is where, like, a good tax professional comes in again.
Totally. They can help you navigate all the rules and make sure you're making the most of these opportunities, because it can be a lot to keep track of for sure.
Okay, so we've covered a ton of ground here. Business structures, deductions, capital gains, all those tax-advantaged accounts, it's a lot.
Hmm.
But before we wrap up, I want to circle back to something else Margin World mentioned, which is tax incentives for entrepreneurs.
Ah, yes. They're like little bonuses the government gives out to encourage certain types of business activity.
It's like they're trying to incentivize you to do things that are good for the economy.
Exactly. Like one example they gave is the R&D tax credit.
R&D, so like research and development.
Yep. If your business is doing any kind of, cutting edge research or developing new technologies, you might be eligible for some pretty sweet tax breaks.
Oh, wow. So it's like the government is helping to fund innovation.
In a way, yeah. And it makes sense, right? Like new technologies often lead to new industries, new jobs. It's good for everyone.
Absolutely. What other kinds of incentives are out there?
Oh, there are tons. Like Margin World also talked about incentives for things like investing in renewable energy.
Okay, so if you're an entrepreneur who's passionate about sustainability, that's a nice little bonus.
For sure. Oh, and they also mentioned something called foreign tax credits. Have you heard of those?
Vaguely. I think they have something to do with, like, if you're doing business overseas.
Yeah, so basically, if you're operating in another country and you have to pay taxes in that country, you might be able to get a credit on your U.S. tax return for some or all of those foreign taxes.
That seems incredibly helpful, especially for businesses that are, like, thinking about expanding globally.
It's huge, but again, like with all of this stuff, it's super important to talk to a tax professional who really knows their stuff. They can help you navigate all the ins and outs and make sure you're taking advantage of every opportunity.
All right, so I think we've hammered this point home, but it's
Ah.
worth repeating. Expert advice is crucial. Like, we've thrown a lot of information at you today, but at the end of the day, every entrepreneur, every investor, they're all going to have their own unique circumstances.
Totally. And a good tax advisor can be like, I don't know, a financial therapist and a strategic coach all rolled into one. They can help you make a plan, navigate the complexities, and hopefully come out ahead.
Love that analogy.
Yeah.
So as we wrap things up here, what are the key takeaways our listeners should walk away with?
I think the biggest one is just like, don't be afraid of taxes. It's easy to get intimidated by all the rules and jargon, but the reality is a lot of this stuff isn't actually that complicated. With a little bit of effort, you can absolutely get a handle on the basics and make informed decisions about your money.
Empower yourself.
Yes. And then the other big takeaway is just the importance of planning. Whether you're just starting out in your business or you're a seasoned investor, having a solid plan for how you're going to handle taxes can make a world of difference in the long run.
And don't be afraid to call on the experts for help.
Couldn't agree more. All right, well, I think that's about it for our deep dive on taxes. Hopefully we've given you some food for thought.
We definitely have. And to leave you with one final thought, we've been focusing mainly on the U.S. tax system today. But what if you're an entrepreneur who's thinking about expanding internationally? Or an investor who wants to explore opportunities in other countries? How might that change the tax landscape for you? It's something to ponder for sure. Until next time, everyone, happy investing, happy entrepreneuring, and may the tax advantages be ever in your favor.